Right, good morning all. Welcome to this March meeting. Good morning, Gareth. And first of all, we'll ask for apologies. Are there any apologies?
Yes, we've had apologies from Councillor Marshall, Councillor White and Councillor Bagley.
Thank you. Can I ask which authorities they're from, please?
Yes, so Councillor White is Sheffield and Councillors Marshall and Bagley Rotherham.
Thank you. It's unfortunate that both members from Rotherham are not able to be with us. Okay, second is any urgent items or announcements? Guess there are none. Thank you. Items we consider in the absence of public and press. I think there are some.
Yes, so items 14 and 15 to be considered in the absence of public and press.
Thank you. Is that immediately before the break?
That's right, yeah.
Convenient, thank you. Declaration of interest by members. Pecuniary or otherwise, no. Thank you. Questions from members of the public? No. Reports and questions by members? So at this point, no, I'm sure we'll get some. And minutes and actions of the previous meeting, can we agree that they are a true record? Yes?
Could I just question on page 23? Could I just question on page 23? The first bullet point, should that be acquisitive rather than inquisitive crime?
Well, perhaps it's both.
It's page 23, Gareth, the first bullet point.
Sorry, I just realised in my it is acquisitive.
Thank you. Other than that, I think they're true and fair. Thank you.
Acquisitive crimes.
Unless it's Pete and Tom.
Oh, inquisitive crime is an interesting concept, but not probably for this committee.
Just one accuracy. I don't think Eugene Walker's the CFO for Sheffield City Council anymore. On page, the attendance details, we just need to get his job title right. And a couple of pages on from there, we've got comments that we're getting reports back on some health and safety items to this meeting that we talked to the last meeting, but I think the next health and safety report's in June, so I'm assuming we're going to get those then rather than here. So if we can just note that, please.
Item 8, which is the Treasury management strategy. Mike.
I'm going to take that one, Chair. So, thank you. So the Treasury Management Strategy, this is the strategy for 25-26, and it's been brought to Audit Committee as to give you an opportunity to consider it before it goes forward to the MCA board next week for formal approval. It differs this year in as much as we've now got a single strategy covering the activities of both the MCA and the police fund, so they're now brought together underneath a single overarching strategy. But having said that, because the police fund is a separate ring-fence fund, the way it's laid out is there's a series of prudential indicators which form part of the strategy, and there's a separate series of prudential indicators for the police fund, distinct from those for the rest of the MCA, so that you can look at those and satisfy yourselves or consider the affordability in the context of the police fund budget rather than the context of the MCA as a whole for the police and MCA combined. So that's the rationale for the presentation. And over the course of the 25-6 financial year, we'll be sort of monitoring performance against those separate series of indicators, so you can see the relative position of the police fund and the MCA separately. So the key aims of the strategy are to set out the capital plans for the MCA and the police fund for the next 3 years, and for you to consider, whether they are affordable and proportionate, to look at the level of external borrowing and consider whether that's within prudent and sustainable limits. Look at the amounts that we're charging to revenue for the repayment of debt, which is your MRP charge, which has been covered quite extensively. And finally, there's an investment strategy which sort of sets out the general principles which we intend to follow when we're placing investments, surplus cash, and that is guided by the authority's risk appetite, which is very much driven by security first. So we want to make sure that we're investing in secure assets which have got a very low risk of defaulting. Liquidity, so that we've got cash available to meet the debts as they fall due, and then finally the third being the return that we can earn on those investments, having satisfied those first two priorities first. And there's a little bit of an economic background that sets it in context as to where we are sort of globally, which is obviously a period of considerable uncertainty at the moment, and domestically where the economy is sort of stagnating. So there's a table in there which sort of sets out our Treasury managers' thoughts as to where sort of interest rates are going to go over the next couple of years or so, which drives our borrowing strategy and investment strategy. And those tables indicate that we're still anticipating that base rate's going to fall, but under the current economic climate, the projections now are that's going to spread over a longer period, so they're not going to fall as sharply or as quickly as what was sort of envisaged a few months ago, but that's still the broad overall trend. So in terms of the first of the sort of aims of the strategy, the affordability of capital expenditure plans, they're set out on pages 47 and 48 of your pack, but in essence what it shows is the MCA's capital plans are all fully funded, so there is no intention for there to be any borrowing requirement over the next 3 years on the MCA's capital plans. On the police fund's capital plans, then almost all of the police fund's capital expenditure, capital investment, is going to be funded by borrowing. So that's going to increase the borrowing requirement on the police side over the next 3 years, simply because the police doesn't have access to the same level of resources that the MCA has got in the way of capital receipts and capital grants, so it has to fund its capital investment plans through borrowing. And that then sets the sort of context as far as where we are if you look at the level of external debt that we've got currently against what that underlying borrowing requirement is. So on the MCA side, the tables show that we've got surplus cash available because the underlying need to borrow is less than what we've got in the way of external debt, whereas on the police fund side it's the flip side, it's the other way round, the opposite way round. So there is a need to borrow, and the way we sort of brought all of that together is because on the one hand you've got to look at the underlying need to borrow to fund the capital investment programmes, but you've also got to look at what cash-backed reserves we've got available in order to fund that. And there's a couple of tables on page 61 and 62 which show the balance sheet projection. So these bring these two halves together. So on the one hand it shows what the underlying borrowing requirement is from the capital investment plans, and on the other hand it shows what's happening to the level of cash-back reserves. And in the case of the MCA, there's plenty of cashback reserves because of the way in which we're funded. So we get a lot of capital grant up front, and then the programme delivery takes place after we receive that funding up front. So they've got considerable cashback reserves both on the capital side and on the revenue side, and there's more than adequate levels of cashback reserves for the next 3 years or so, which is going to cover off the underlying need to borrow and give surplus cash which is going to available for us to invest. But on the police fund side, it shows a different pattern in that you've got an increase in the borrowing requirement because the capital programme is mainly funded by borrowing, and at the same time there's a drain on reserves and provisions and a reduction in the level of cashback resources as the reserves and provisions are used to support the revenue budget over the next 3 years. So the impact of that is on the police side, we're anticipating that there is actually going to be a need to go out and borrow externally from 26, 27, 28 and 28, 29. So we'll have to increase the level of debt on the police fund side in order to bridge that gap. And the consequence of that is there will be an increase in the amount of interest charged on that debt, which will feed through into the police's capital financing budget. So the only other thing probably just to mention on the capital expenditure plans and borrowing side of things is that as a combined authority we have to get annual agreement with Treasury on what our debt cap's going to be for external borrowing. Long-term external borrowing, we haven't yet been given that. So in 24/5 we got a debt cap of 595 million, which gave us a large amount of headroom if we wanted to take up any investment opportunities that presented themselves, but we don't know what the equivalent figure is going to be as yet for 25/26. The other thing, the key element on the capital financing budget is MRP, and we've done there's been a lot of discussions around MRP, so I'll not dwell on it in any great depth, other than to say the MRP policy statement that we've got included in the strategy is consistent with the statutory guidance on how you charge MRP, but we have agreed one departure from that with the support of external audit, in that where we identified there was this 66 million of capital expenditure that had been incurred over a 5-year period for which there was no planned MRP provision, that we're going to start charging MRP to pay down that 66 million capital financing requirement over a period of time. And what we've agreed is that for short life assets up to 25 years, instead of that being, so if you've got an asset which had a life of 5 years, say, ordinarily you'd be charging MRP over a 5-year period, but the transition that we've agreed with the auditors in order to make it affordable is that for short life assets up to 25 years, the MRP charge is going to be over 25 years, irrespective of the life of the asset, and going to be done on a straight line basis. So it's a bit of a departure from the normal standard MRP rules. And then anything with a life over 25 years will just follow the standard MRP rules as far as how we charge that. And the overall effect of the MRP policy is that in the fullness of time, where you've got a capital financing requirement, you need to write that capital financing requirement down to nil. And this MRP policy will deliver that outcome in that the MRP policy, spread over a long period of time, will write the capital financing requirement for both police fund and the MCA down to nil. And there isn't a table included in the strategy that you've received, but in the one that's going to MCA board, there'll be an additional table. Oh, right, sorry, it's on screen. Yeah, so it's on screen. So this is the additional table that's going to go into into the report that's going to the MCA board next week, which just shows you how the capital financing requirement will, in the fullness of time, be written down to zero.
So I think just to build on what Simon said, when we've talked about MRP previously, we've talked about whether the information that was provided to this committee and to Giant was sufficient to allow you to properly understand what was happening and for you to see the CFR, the capital financing requirement, which is the underlying need to borrow, reducing down to zero as it should do in time. What we've done through the report on pages 49 and 50 is really try to exemplify that trajectory on the longer term. So we recognise that in previous years the sort of snapshot of that graph was possibly too short. So we've kicked this out into the long term. So for both the MCA on page 49 and for the police fund on page 50, you will now be able to see that line hitting zero. So that should give you confidence that there is nothing missing in the way that we identified with the inherited OPCC position. The second element is that whilst the graph only tells you so much, what we recognise is that just seeing the cold hard numbers in terms of the profile would probably be helpful as well, which is what we are seeing on screen. So we have both the MCA position and then the OPCC position. We then have the middle column representing the MRP profiles per annum. So we've got the MCA on the left-hand side, OPCC on the right-hand side. Now, if we scroll this down to the bottom, I'm not sure if we can, what we'll see is that over time, this reduces to nothing. So when you take a mortgage out or repay your mortgage, the bank will always give you something that looks roughly similar to this, which shows you your repayment profile. So we can now prove that all the charges are in, that those charges are in the revenue budget, and that we are complying with statutes and that we will repay this. So we think this is probably the right level of information to give to the committee. Appreciate this was not in your pack. It should have been, but we've missed it by accident. So we'll distribute this to you after the meeting. But hopefully that gives the committee the confidence that what should be in there is in there, and that we're providing you with the information at the sufficient level of granularity for you to test that with us.
Yeah, so just to sort of bringing it all together, finally, on page 51, there's just a summary of the financing costs for both the MCA and the police fund, and that brings together the charges to revenue relating to interest on the external debt, and the MRP charges which arise on the capital financing requirement. So on the MCA side, you can see there's just a slow, steady decline as debt is repaid, and the interest on that debt therefore falls, because the strategy remains that as debt is repaid, we're not replacing it. So there's just a steady decline as far as the MCA is concerned. And on the police fund, you can see the impact is from taking out the additional borrowing from 26, 27, 27, 28, 28, 29. That starts to increase the level of interest on that external debt. And also, as we start to rectify the omission of MRP on the 66 million that was previously overlooked, and start to apply, sort of the correct MRP principles to debt that's taken out in, from now onwards, there's a steady increase in the level of MRP. And just to say, as far as that sort of trajectory is concerned, although it's on an upward trajectory over the sort of 5 years that we're looking at currently, it doesn't carry on escalating indefinitely, because you reach fairly quickly a plateau situation, because you've got relatively short life assets. So it does sort of top out and you end up with a plateau. So it's not as if this is going on with this upward trajectory indefinitely. It's not, it will plateau. So you've then got a sort of a revised baseline position going forward, which is of the order of, you know, where we get in 29-30. And then finally, just as far as the investment strategy is concerned, not a huge amount to say on the investment strategy because it stays very much as it has been, you know, in previous years. In that we take a sort of a risk-averse approach in the counterparties that we choose to invest with, but we've actually done, both ourselves and the police fund have done very well, you know, got strong performance in that we've got returns at or above the Bank of England base rate at minimal risk. So, as things stand, you know, we're going to continue with that same investment strategy. The only tweak we're proposing to make, as far as 25-26 is concerned, is that we previously had a limit of 50 million on local across the board for all local authorities. So we're proposing to relax that as far as the 4 constituent authorities are concerned, to give us a bit more flexibility if Doncaster, Barnsley, Rotherham or Sheffield should choose to, you know, ask us for some additional lending if, you know, the circumstances are right. And just finally, just a couple of things to mention on capital flexibilities. So in 24/5, the Treasury management strategy included capital flexibilities for the first time. The government's recently announced that that scheme will continue for a further 5 years, so proposing to extend it again into 25-26 because it then gives some flexibility and discretion on the use of capital receipts, which can be used, you know, to fund revenue in certain circumstances. And then finally, there's a financial guarantee. So with the transfer of tram operations to Sheffield back in March 24, the company doesn't have any borrowing facilities. So in order to provide it underwrite Sheffield in effect, we're proposing that there should be delegated authority given to Gareth and the Chief Exec to look at providing a revenue loan to Sheffield as it was in 24/5, which ultimately would then be converted into a revenue subsidy once the value is known, and also to provide a financial guarantee because the company doesn't have any trading, or has only limited trading history currently. So the upshot of all of that is just looking for members of Audit Committee to endorse the 25-26 Treasury Management Strategy, including the 5 component parts, so the policy statement, borrowing strategy, capital expenditure estimates, minimum revenue provision policy statement and annual investment strategy, and also to support the granting of delegated authority to the Executive Director Resources to make use of capital flexibilities in 25-6 as outlined in the capital flexibilities strategy, and also to support granting a delegated authority to the Executive Director Resources and Chief Exec to continue to provide a loan facility and financial guarantee to Sheffield. So that's it.
Okay. I think some people have indicated. Councillor Levery, did you indicate?
Yes, thanks, Chair. The police fund is causing me some concern, particularly when your revenue budget is being propped up by reserves, and those reserves are exhausted by 27-28. So what steps have been taken to get this spending under control? Thank you.
I think we have an item on the agenda where we're going to go off camera, and I can update on that in a little bit more detail. There's some sensitivities around this that is happy to pick up in that session.
Thanks for that, report, Simon, you several times mentioned the financial guarantees to Siftel. Apologies if I missed it. How much are we talking about? Is question. Well, I'll just ask that one and then let you come back on that one. And I've got some others.
Well, the loan facility was 7.5 million in 24-25, but some of that the vast majority of it will probably be converted into a revenue subsidy. So there'll be a roll forward of whatever there is left over. I don't know if there's a figure that's been determined or whether it be a similar kind of level for 25-6.
I can probably assist with this one, Dave. So the amount that we're forecasting to provide by way of an operating subsidy for the next 3 financial years is £6 million per annum. We're dropping to £5 million per annum for the remaining 2 years of the decade. So I'd envisage that the loan is broadly going to bubble along around roughly around that level. What we had to do this time last year, was we had to advance about 6.5 million up front for 2 main reasons. One was because Siftel had to basically purchase all of the stocks and spares from Sizewell in order to have parts available for trading as of day one. And secondly, the Office of Road and Rail required full comprehensive insurance to be in place before the day of trading, 22nd of March, and that was a significant amount of £1 million to £1.5 million. So that was advanced up front from the MCA to Siftel to allow them to cash flow the purchase of that insurance in time. And so since then, we've been reviewing how we provide cash flow support, and the process has evolved during the year. But now we've got to a point where I get a monthly, I get a cash flow forecast that looks ahead for the next 12 to 13 months, and then I assess and then consult with Gareth where I feel it's appropriate on how much should be advanced. But the idea with that and the financial guarantee is that we make absolutely sure that any new suppliers who are dealing with Siftel have the confidence that the company is backed up by the MCA.
Okay, thanks for that. The only thing I would say is, what have we done to ensure ourselves it doesn't have to be a lot more than that? What are the downside risks on that? And is it an open-ended guarantee, or do we go back somewhere if suddenly it's not 7 million a year, it's 12 million a year or 18 million a year? The thing with guarantees is, they can sometimes escalate and you get into problems.
So, in order to provide enough flexibility to act on an agile basis, you're quite right, this is a trading business, things can happen fairly quickly. There's flexibility in there that doesn't restrict myself from making a request to advance further cash flow support to Siftel. So we have that flexibility. Obviously, one of the main issues would be that if we were to over advance a significant amount of funding, then I suppose there's the only real kind of downside risk, I say, would be the opportunity cost of investment, sort of interest receivable by the MCA. But that's the only major downside risk that I would see, is the opportunity cost. The main thing is we've got to have the flexibility, because if there's any issues, for example, with volatility around passenger numbers and therefore ticket revenues, and or if there's a major incident that requires a significant amount of reactive maintenance costs, then that would affect the monthly profile that's been provided to me as a forecast. So being able to react quickly and swiftly is the primary concern.
The guarantee isn't the only way in which we're managing this risk as well. So the Articles of Association restrict the company from entering into any credit arrangements and also entering into any investment arrangements. So essentially we're managing the cash management for the company. Company banks with our bank as well, so essentially any cash held is on deposit with our own bank. and is part of our banking group. So we log on to our bank, we see their bank account, so we've got comfort in that sense. And then just in terms of managing exposure through those guarantees, because of the way in which we can control the entity through the directorships that the MCA has, and the way in which the ability to enter into high value long-term contracts is controlled by the board, we can actually hold and choke the flow of risk at the company level, and that's one of the reasons that I'm right now chairing the board, so that flows through me at an officer level. So the key control realistically is the level of public subsidy that we are willing to commit to that company. That forms the first level of public control. From that, we have a whole bunch of, so almost like second level elements of control right down to the third level, which is Mike having a conversation on a weekly, monthly basis with the FD at the tram company to determine the flow of cash back and forth. So I feel like through various levels of control, we've got this stitched up and we can manage our risk exposure at any one point in time.
Thank you, Chair. I think that's helpful, Gareth. And I was thinking that this must be tied in with the annual budget, presumably. Is there no way we can get those sorts of controls into the delegation? Because I would question best practice. Is it right to give an unlimited delegation, which is what we've got here? Whereas in practice, what we need is something that's pragmatic, that can deal with short-term cash flow problems. But that's surely got to be within an overall envelope of the annual budget. And if we need to go outside that annual budget envelope, then should there not be a need to go back for further authority from Executive Leadership Board or something like that? I'm just thinking about what happened in some southern authorities where officers were given unlimited powers to go out and invest and borrow and do things and caught a nasty cold from it. I think we've got good controls here from the way you're describing it, but I just think that perhaps should be written into the delegation that we're giving.
Yeah, we can have a think about how the word, and I think the box in which those delegations are operated is quite tight, and I think that's where we saw the strength in it. But perhaps, Simon, if we find a way to exemplify that, it'd be helpful.
It's you, Dave.
Yes, I think to emphasise Paul's point, you sound like you've got a whole series of controls over it, which is fine, but in terms of giving the delegation, it feels like it needs more quantification and some limits each side. So A, we're saying we're delegating authority up to, and B, if it goes above a certain level, then you need to come back to us and discuss it again, because it's a very loose, open-ended delegation. I think we might be criticised for giving such an unquantified delegation. It's just we're delegating to you to do something with no financial bounds around it, which doesn't feel tight enough.
Yeah, I'd just point out that is in consultation with the Chief Exec, but I hear what you're saying, that it should go.
Sorry, can I just ask a couple of other slightly detailed questions? The capital receipts, the flexibility that we've got to use them, just out of interest, how do we generate capital receipts within the authority? What's the asset sale we're making?
So we've got some residual transport assets from bus deregulation. So there was a former bus depot in Rotherham that we disposed of, that we generated about £1.5 million from the sale of, and then also there's some other depots, and there's some surplus bits of land. It's to do largely it's bus deregulation legacy assets that we've got available.
Right, thank you. And then one final question was...
Oh, sorry, I should just add as well, we've got loan repayments as well, because some of the loans that we advanced, when they get repaid, they come back to us as capital receipts, so there's an element of those as well.
And then there's reference on page 57 to table 4. Is that the table that's down in page 58? On the next page. Apologies if I've had a man look and missed it. I couldn't see the table heading, that's all.
Oh, sorry, that'll be, it'll be the counterparty limits. There's no table.
Investments by type 24.
Is that in on page 58, the one below under investment portfolio?
It's the core one on page 65.
Yeah, it's the
Yeah,
core
well,
one on page 65.
65.
So, yeah, apologies, yeah. It's
Right,
the lending
no
limits on page 65.
Thank you very much indeed for that.
Sorry, I'm going into some questions of detail and notes on things now. On page 40, just sort of almost noting we've got a weighted average balance of investments of nearly 497 million, nearly 500 million. Jaw always drops as to how much cash we're sitting on now. I think you've explained that in previous meetings about in terms of getting government grants way in advance in us dispersing them and that sort of thing. So, and I take in some way some comfort from the fact the interest receivable line in the table above that drops off from 22 million to 4 million, which I take it means we're expecting that level of cash balances to reduce quite a bit. I'll just ask the question, are we happy that we haven't done something wrong to be sitting on so much flipping cash? Because it's an awful lot of cash, 500 million. It's a lot of...
There's a number of things going on in this. So, like every other combined authority and lots of local authorities, over the pandemic period when government opened the fiscal levers, we received lots of money up front to deliver capital schemes that would always be years in their gestation and delivery. We also had run-of-the-mill capital activity, such as Transforming Cities funds, that was due to run over that pandemic period that we actually just put the brakes on while we dealt with the urgency of the pandemic requirements. That is now beginning to unwind, so that's one of the reasons that we expect cash balances to decline. The other point over that period is that from 2020 we were in receipt of the annual gain share allocations, and again, rather than just spend the money on whatever was available, we had a fairly considered approach to it, which has seen capital and revenue allocations increase as that 30 million kept landing. But we now expect to start spending that money into the future. So for a number of interesting sort of historical reasons, cash has built up over the last few years. Our programs are now catching up, so we now expect that to spend. And just by way of interest, our highest ever level of capital expenditure was in the last financial year at 150 million. If our forecasts for the current year come in, we'll beat that and we'll be up around 180. And we may well even beat our base case forecast. So we've spent a lot of time in the last year or two trying to speed up capital delivery, and we're seeing the fruits of that flowing through now. The other point is that we have used some good fortune in the way that our high cash balances have coalesced with high interest rates to generate Treasury management income, and that's one of the lines you're referring to. Rather than just spend that, we've, with the support of the board, used that to shore up our financial position, and we've put quite a lot of money into reserves, whether it be our capacity and capability reserves or into the bus franchise resilience reserve to manage commercial risk in the franchise environment. We've put 20 million into our bus franchise transition reserve. So we've squirreled away large amounts of money to manage forthcoming challenges and general systemic challenges. But that in itself means that cash is higher than it otherwise would be. Now that's part, I think, fortune that's happened, but part sound financial management, in that we've managed to convince the board to use that money judiciously rather than spending it on whatever was available at the time. but that will inevitably unwind over the next few years. We will transition to a franchise arrangement should the board vote on the 18th of March to proceed with franchise, and we will start to exhaust some of those reserves around our capacity and capability that we're now dropping into the budget. So those balances will come down, and with it will come down the interest that we've been earning. So part of the key budget challenge that we are looking at is we've got a peak of income at the moment, but that will not be there forever. So how do we transition from where we are today to where we expect to be into a few years' time without generating a huge amount of financial shock when that money is no longer available at the same quantum? And that's part of our overall reserve strategy and the MTFS that will be going to the board on the 18th. So hopefully that helps in a little bit at least.
Thanks, Figure. Yeah, I think it does. It just always feels such a huge amount of cash to have generated somehow, but I think there's a series of reasons for it. Okay, just two more, since we're enjoying to study the graphs in great detail on Treasury management reports. Page 49, there's a table there, and there's a comment about, at the bottom, the gap between existing loan debt in blue and future need for loan debt in dark blue. Am I right in thinking the gap is, because it looks to be two separate graphs there, which don't have particularly a lot of gap between the lines, but am I looking at the top graph in light blue against the dark blue in the bottom graph and coming up with a gap, explaining that gap there? Because I look at each individual graph and they don't have a lot of, the bottom graph doesn't have a lot of gap at all, and the top graph, the gap goes down to zero, but I think I'm looking at the difference between top and bottom graph, and you're explaining that. Okay, right.
So you're right, Dave, in that if you look at the blue bars, that's your external debt.
Yeah.
And then if you look beneath, it looks odd because we're in a negative overall liability position, but the one that's shaped like a hockey stick, that is your actual sort of borrowing requirement, gross borrowing requirement. So the gap is, because we've got a negative gross borrowing requirement, because of the level of cash-back reserves that we've got, then you've got the difference between the blue line, the blue bars, and then the dark grey, dark blue hockey stick beneath it. That gap represents the amount of surplus cash that we've got available to invest. But if you look on the one below, it's the other way around. So on the police fund, you can see that you start off with the blue bars indicate the level of external debt. So as it stands in 24-25, that matches where the dark blue line is, more or less. But then the dark blue line is a quite sharp peak as the borrowing kicks in for the police to fund the police capital investment plans. And so you've got the opposite way round on those. So you've got the dark blue graph well in excess of the blue bars, which illustrates that there's then a large borrowing requirement.
And I don't need to worry that on the graph on page 50, the lines drop below zero then, which just looks a bit...
No, I mean those are just,
okay, as long as it's not. Sorry, and one final one for me. In your presentation you talked about and we might want to cover this in the separate session, but the departure from the MRP rules to write things down over 25 years rather than 5 years. And the auditors had agreed this. Do we need to discuss this in the private session, or it just sounded a bit... I know we talked last time about being as flexible as possible to reduce the pressures on police as much as possible. We're all in favour of that, but the way you presented it, it made it sound like we weren't following the required MRP rules, which doesn't sound like a flexibility that we have. Do you want to discuss that later, or
I think we can do this bit now. So we've modelled out countless scenarios in our working with Home Office. Our principal concern was that the 65 million that was missing, 16 million of that was missing from prior year accounts. We got independent validation on that. So if we put that right, that would be a 16 million hit in the books that would wipe out the vast majority of the general fund reserve. If we then applied the guidance as is written per the MRP policy, over the next few years, I think it was a 6 million charge, a 5 million charge another 5 million charge, and we would have just wiped out all reserves at that point and be running deficits. So the proposal that we have to write back over 25 years to put this right means that we're not following the guidance, so it is a departure from that, but it is a pragmatic way of putting right a historical end a mistake in a way that allows us to keep balance in the budget year after year. So our aspiration throughout all this has always been to be compliant as soon as practicably possible, but also to carry on delivering blue light services, and finding a balance between all that is an issue. So this was our approach to getting back to the right position on that historical issue as soon as possible without exploding the budget.
And Home Office and the external auditors are happy with our departure from the guidance, are they?
Yeah, so we've had multiple discussions with Gareth and the team, and have taken it through our technical team through various consultations and things. So again, agree that it's the most pragmatic approach to it. We will, when we review the 24-25 financial statements, make sure that there's the relevant disclosures in there that kind of signpost to any departures from the code, and ensure that users of the account kind of get a feel for what's been done and why, and that will also flow through into our value for money commentary within our audit plan and auditor's annual report as well.
And I think the final point, Dave, sorry, and just follow on from Molly, is we also saw KC opinion that under the circumstances, the Chief Finance Officer does have the means to step outside the code when they find themselves in such an issue that we've got here. So I'll talk to you a bit more in the private session about where we're up to with Home Office, but we think having the KC opinion, having external audit's view, having the Home Office's view gives us enough assurance that this is a pragmatic thing to do in the circumstance.
Okay, thank you, and I'm grateful for you finding a way through this and external audit being flexible on that. I'll resist saying disclosure is no substitute for correct presentation, which is what I've heard technical teams say when people try and argue that they're doing something that's not quite right, but they're disclosing that it's wrong. But as long as your techie team is written off on it and Home Office are on it, it clearly makes sense to solve this. I don't want to be awkward, so I won't be.
I think we're clearly in a position where everybody agrees that it's the correct thing to do. So I think we'd be satisfied with that. Steve.
Yeah, my question a little bit follows on to that, and picking up from Simon's presentation. So is that 25 years straight line the only straight line bit, or are we moving the police fund MRP away from the annuity system that was in place before?
And we're leaving them on the annuity. I think, as we've discussed in previous sessions, moving to a straight line methodology just really exacerbates the problems we've got. What we are committed to do is, over time, just trying to consolidate this down and having one way of working. That is probably a conversation about the future capital programme and how we do that. And that's a piece of work that we'll be picking up in earnest in April with the new Force CFO, Neil Chamberlain, about how do we develop a capital strategy that's fit for purpose for the future rather than what we've got now. And that would be part of the consideration.
Okay, thanks. Second question, bottom of page 62, it talks about the options for borrowing, and it says it could be the local authority market, PWLB, or through interdivisional. So in a strategic sense, how will you make a decision on where the borrowing will come from?
Largely based on financial efficiency. So in any time we go to the market, we're testing what's available from the capital markets. That's normally high street banks and any institutions that are active at that time. It's not as broad as it used to be. But then also testing with where we're up to with PWLB. PWLB is priced over gilt, so it's normally quite competitive. But then there is a very healthy local authority market that often will undercut PWLB. And then I guess the final section is what can we do off our own balance sheet. So we talked quite a bit in this session about the levels of cash that the core MCA business is sat on. And one of our starting point will be if police fund needs money and the MCA has cash that it needs to invest, it would be better to keep that within the group, because that means we're more flexible. We cut down on transaction fees. We can send cash when necessary, and it also means that we're not bleeding interest out of South Yorkshire, out of the group. So we think that's a really sensible thing to do. There may be circumstances where we can't match it up because, say, the MCA might be in a position to lend money over a 5-10 year period, but actually we think the best thing for the police force is to lock in over a much longer period. In those circumstances, we'll step outside the group, move away from our own balance sheet, and then test where we're up to with the local authority market, which again it tends to be top end 10 years, and then banks tend to be around 25, unless we're entering into strange low borrow arrangements that we won't be doing, and then PWLB will lend us up to 50. So each segment of the market offers something slightly different. So how long do we need to borrow for? What do we think the complexity of entering into transactions looks like, and then what does the interest rate look like on any given day?
Thanks, Gareth. I just wondered whether a sentence that brings all that down to whichever's most financially viable would fit really. And the paragraph above that mentions temporary borrowing. What time period is temporary borrowing over?
We normally consider temporary borrowing as anything less than a year. We'd consider that for cash flow borrowing. So if we find ourselves in a position where we had a short-term deficit, but we say knew a grant was due over the horizon, we might just infill around that with short-term temporary borrowing. The local authority market is very active in temporary borrowing because lots of local government bodies, policing bodies, fire, and so on, they receive trench of money from government. They don't need it right at that point, so they'll try and move it around. So anything less than a year would probably look to be in that market.
Thanks a lot. And finally, I think that table showed it went out to 22, 68, 69. So are we talking about paying this debt down over 250 years?
We probably won't, but for the sake of completeness, we showed you the profile as it works now. It is simply because on pre-2008 debt, before changes were made to the Prudential Code and prudential borrowing was brought in by the government of the day, the approach to paying down debt was to simply take a 50-year annuity, which means that you have quite high initial payments and then they just drop and drop and drop and drop until you pay in pounds and pence. What we've seen in the past is where you get to a specific point, you'll just chop it off and pay it and be done with it rather than processing transactions for the next few hundred years.
Yeah, if my recollection's correct, it went down to £1 at the end. So
I'll pay that.
So, any further points? Okay, well, if we can then endorse A, B, C, D, E, F, and I assume we'll be getting another line on the delegated authority issue, will we?
Yeah, we'll update that. We'll send you what we showed you on screen, and then we'll report back to you formally at Q1. So we bring the TMS to this committee every quarter. Yeah, we'll get that updated and sent back round.
Okay, so if we can do that, all in favour? Thank you very much. And item 9 is internal audit, please.
Thank you, Chair. So yeah, our first report today is the progress report. This provides a summary of the internal audit activity since the last meeting. We've got the one report which has been finalised since the last meeting, which I think was a month ago. So we've got payroll report, which is next on the agenda. In terms of kind of our work for the remainder of the year, we've got 2 reports that are in draft at the moment, which are the SIFTL risk management and health and safety, and they're going to be tabled to come to the next audit committee in June. And then we've got the HR and follow-up audits, which are underway at the moment. So we're confident that we're going to get the remainder of the 24-25 plan completed by the end of the year and have our internal audit opinion for the next audit committee. Also, since the last audit committee, we've met with management and done our kind of annual service review meeting just to get any feedback on how the last year went, any areas for improvement. And we also had a pre-meet with the audit committee and chair and vice chair this morning, where we just kind of mentioned as well any areas for improvement and kind of nothing to report back to the committee really. As you'll see on page 79 of the pack, there are KPIs for the year, and pleasing to note they're all on track as well. So I'll just pause there and take any comments on the progress report.
I've just got one very small one. On page 91, you talk about instances that details on bank details forms did not match those on the payroll system or were not recorded on the system. You then say, review those 4 instances, identified employees' details were, right, you then say were no longer on the system, so not like necessary to retain. So is that the top sentence just, if they're not on because they've left now, that kind of feels fine, but the first sentence implied that some of them didn't match to the payroll system, which is not fine, because you wouldn't want things to be not matching. But are we saying they did match, but they've now all left?
Yeah, so I'm happy to take this now, but I was going to come on to the payroll part in a second and kind of pull out the key details. No, it's fine, don't worry. In that case, it was they had all left, so it wasn't a case of mismatching bank details to what was on record as well.
Thank you.
Sorry, Chair, as we've jumped onto this one, because that was one of my questions. So what was the breakdown in procedure?
So I don't technically think there was a breakdown in procedure. What it was when we'd picked the starters, they'd actually left as well. So I think it's just more of a anomaly in our sampling, I think.
Fine.
But what I'll do is I'll just kind of present this report as we're moving on. We've got questions on this one now. So kind of as an overall, so we looked obviously at, this was our audit of payroll. Here we looked at the controls around the payroll framework. We also did data analytics testing across the whole population, where we're looking at data exceptions such as duplicate payments, bank details not matching, any kind of ghost employees, and we didn't find any exceptions there, which I think is like really positive and quite unusual, if I'm going to be honest, that we don't find any data exceptions. So that kind of shows the good kind of data integrity kind of within the system. As you'll see on page 85, it came out with substantial assurance, and we've got the 3 low actions. In regards to those actions, I think the key thing is it's the documentation that sits behind them. So when we've done sample testing of starters and leavers, what we found is the completion of the forms, the time minimum was after the start date, or say we've done the leavers testing and we found that some of the elements weren't completed on the forms. So it's more kind of that record keeping where we found issues, and you'll see that we've agreed management actions, or we've kind of due implementation dates due quite soon for those. So that was kind of what I was going to pull out, but I'm happy to take any questions on that one.
Just one further observation on what you just said there, Anna. Like with, I think it was the procurement report, which we had last time, there's a reference on page 90 about the fact that we're following our procedures as we would want them to work, but it seems to me that we've not checked that within the rules that we operate, those procedures have been approved. Because it says the Assistant Director of Financial Services has been given the right, as it were, to take an action, but we've not actually amended our delegated authorities, etc., to reflect that. I just wonder if there's a bit of a learning experience that we need to think about within the organisation, that when we've decided on a particular course of action, we just need to check that we've done all the delegated approvals and dealt with that side of it as well.
Paul. So I think this is the balance really between what we formally put in our financial procedures, for example, and how we manage this operationally. So the payroll processes are Gareth's responsibility and the chief exec's responsibility. Obviously, as part of Gareth's line management role, he delegates that to the relevant members of staff. So I think as part of the action regarding the picking up the financial procedures, we can try to cover some of that off, but there's a balance between trying to write down everything that might change on an operational daily basis versus keeping it high level so that we can be flexible and in terms of how we apply our procedures.
I think that's a fair point, and it goes back to what we've discussed already, both on the guarantee and Dave's point about we've got a way of doing something, but we're moving away from it. And wherever we put people in a position where we're saying the rules don't enable you to do your job as you need to do it, they then become used to thinking that, well, that rule doesn't apply, it's okay to break the rules. So wherever, and I think my point would be, wherever possible, we need to set the rules out that give people the necessary freedom and flexibility to do what they need to do in the time scale they've got without having to break a rule that we've set.
I understand that. I'm fairly certain there was a formal delegation to you, Owen, to approve the payroll, but we can pick it up, but we do normally document this sort of stuff, so we'll follow up on that one.
Are we now effectively covering all the three?
So we've done the progress report, we've done the payroll. I was going to just kind of pull out how we've got to the plan, if that's all right, Chair,
Okay,
for the next paper. Yeah.
They are all together.
Yeah, so the next report we have is the internal audit plan for 25-26. So as members might remember last year, how we get to this point is we look at the risk register, look at kind of, the top level risks. We look at what's going on externally, so the new Procurement Act, for example. We met with management and also presented this to ELB to kind of get a cross view of all the areas we're looking at. And now it's for your review today to make sure that the areas we've put in the plan, whether they cover your kind of key areas of assurance that you require as a committee. As you'll note, I'll just pull a couple out. So on page 105, it details the individual audits we're proposing to look at next year. So the first one being cybersecurity. That's an area we've looked at in the past, and we thought it was quite timely to look at that again. We've got a couple of areas such as financial management where from discussions at this committee it was an area of focus where more assurance may be required with the external audits not being completed in the last couple of years, and all the kind of the high level details are in there. You'll notice that we've got some SIFTL specific audits in there again this year, so payroll, fraud risk assessment, health and safety. They're all in there as well, and it's really for discussion today whether you think the plan meets kind of your needs as an audit committee. I'm happy to take any questions on the plan.
How does the number of days compare with the previous year in total?
Thanks, Ed. So in terms of the number of days, so last year it was 200, this year it's 210. So it's slightly more. There is the additional review for SIFTL kind of in relation to the item that's later on in the agenda, which has been added as well, but a slight increase.
Just remind me, did last year's plan cover SIFTL as well, or is this the first year we've covered SIFTL?
Last year's included SIFTL as well.
And did the plan go up from the year before to reflect the extra responsibilities?
Yes, it did.
Right. Okay. So you're happy you've got enough additional time to cover the additional responsibilities we've got?
Yeah, we're happy. Yeah.
And at the moment, police has all got an entirely separate audit plan, so there's no need for extra time to cover anything in police either. Then.
Yeah, that's correct. completely
I'm
separate.
just checking that as you know, it's a question I keep asking of Gareth all the time. As the responsibilities grow, I'm always worried that we don't have enough management to cover all the extra responsibilities, and the same point applies to internal audit as well. We don't want to have not enough internal audit to cover the growing side of the organisation, but you're happy we do.
Yeah.
And are we going to defer revenue then in Siftal to 26, 27? Because that was something which we discussed before about being one of the items to have a look at.
I think we were hoping to pick up some of the revenue things under the fraud risk assessment. I think that was our principal area of concern.
I realise that the police fund, the police internal audit has a separate system, but is there some time in there for liaison between the two sets of internal auditors?
Apologies. So we have met with the police internal auditors already and kind of discussed the two plans to make sure there's no kind of crossover. But yeah, we'll be in liaison with them to make sure we're kind of kept up to date throughout the year. Yeah. Sorry, Chair, I think we need kind of probably formal approval that you're happy with that plan for 25-26, if that's okay. Okay.
I say again.
Yeah.
If everyone's content and we can formally approve that plan.
Aye.
Thank you very much. I used to do this in the army, you know. Didn't press the switch, so I was just talking to myself. Never mind. Sometimes more productive. And item 12, then we'll go on to Claire.
Thank you, Chair. Good morning, everybody. So this report presents the draft annual report from the committee. There are a couple of placeholders in that report at the moment, you'll notice. It's on page 129. We now have got the foreword from the Chair, so thank you for that, Councillor Lofts. We'll put that in there. I'm seeking some comments this morning from members on section 3, highlights of the year. Keen to know what you see as your highlights for this year. Whether you want to highlight some of the notable areas that you've looked into, like MRP, Treasury management, things like that. And then at section 5, we have a summary of the feedback from the committee effectiveness survey. And then there's a placeholder at section 6 for an action plan to address any areas where the committee feels work or arrangements need to be strengthened. So happy to take any comments and feedback on those areas or anything else in that draft report today, or even offline if you want to contact me afterwards. Thank you.
Any feedback, comments, objections, compliments? No. Thank you very much. Thank you very much, Claire, for that. Update from Jayak, verbal from Steve.
We've not met since the last SRC meeting. We meet on the 27th of March, I think it is.
So did we get anything further on the body-worn camera subject?
I have an informal meeting. We couldn't get an update at that point because the assistant commissioner who was responsible for that was not available. But we will be expecting an update at the next JAG. So work is progressing to. I don't want to use the word recovery because I'm not absolutely certain that that's going to happen yet. But work is progressing on that issue.
Okay, and if not recovery, at least best practice in future.
Assurance that that is one thing that we do need to look into. The assurance that I've got is that it doesn't affect any ongoing crimes. So it's not evidence that's required for prosecution. But for somebody who's got an IT background, I'm still astonished that you can lose so much data without having it on backups somewhere. So I'll be looking for some assurance that that's in place once the recovery, well, that's in place now.
Yeah, I don't have an IT background, but I do have experience of things. And I'm astonished. I'm sure members of the public might be astonished.
We've raised that point on a number of occasions.
Might be asking questions, and some of them might be relevant.
Yeah, some of them might be happy that that's occurred as well. But yeah, we will be pushing as hard as we can. But obviously, the members of the public wouldn't be able to ask questions because all that stuff's done in private, so they won't be aware of it.
Well, they'll be asking me questions. Okay, we'll not go further on that. Thank you very much for that, Steve. I think at this point we turn off and go into private session, exclusion of public and press. After a break and a bit of a false start, are we ready? Okay. Sorry to myself for spilling coffee all over the place. And we proceed with item 16, which is Andy Gates and the English Devolution White Paper. You're on.
Thank you, Chair. Good afternoon, everyone. Good graveyard slot straight after lunch, so I'll try and be as peppy as possible. So really quickly, this is my 11th year in this organisation in some way, shape or form. And I started out doing the devolution work that led to the 2015 devolution deal. Here I am, still doing it. This paper, I hope, provides this committee with a sort of update on where we are going with devolution nationally and how that plays out in South Yorkshire. So 3 months ago, the government published its English Devolution White Paper, and that will precede a bill which is expected to begin its parliamentary passage this year. That white paper was the government's commitment to sort of formalising the devolution architecture in England. It's worth just saying that, as you will all be aware, so devolution has happened a little bit asymmetrically, is probably a polite way of saying it. It's happened at different times, in different places, at different speeds, and with slightly different powers and functions and responsibilities, depending on where you are in the country. That's quite good in terms of injecting some pace and letting the government go at the pace of the fastest rather than the pace of the slowest, but it also creates a slightly, as I say, an asymmetric devolution architecture, which is, code for word, it's a bit messy. The white paper really seeks to tidy that up, so everywhere, ultimately in England, their ambition is that everywhere in England will have a devolution mechanism in place by the end of Parliament, and in May this year, as the locals kick in, we'll see new mayors elected in a number of places across England. What it does is formalise the kind of devolution system, but it also extends and deepens it. So it gives mayoral combined authority areas and devolution settlements more stuff, more powers, and I'll come on to those, as well as deepening the things we're already responsible for. So a good example of that would be on skills, where we have a devolved settlement. The government are looking to sort of deepen that sort of skills devolution, and that's true across transport, across housing, and across quite a lot of the other functions. What it also does, the white paper, is kind of come up with a new local government terminology. So it establishes something called, we, South Yorkshire Mayoral Combined Authority, will become an established mayoral combined authority. That is to distinguish ourselves from those that are not yet established and are at different levels of maturity. Good news is we are, as an established mayoral combined authority, We're in the sort of vanguard of that sort of wave of devolution, so there is no one in front of us, really. So we will, from 26-27, have as part of that offer a integrated funding settlement, which will give us for the first time a far more integrated set of funds coming down in one single tranche, and that will be agreed through the spending review process, which is, as I'm sure you're all aware, is sort of underway nationally as we speak. Our analysis of it, so it is worth saying also that the white paper is really hot and really excited about coterminous geographies. So places like South Yorkshire, where our public transport, our Mayoral Combined Authority, our health system, our police and fire, all those bits come together administratively. The government love that. They see that as a kind of basis on which they would like to move as many other parts of the country as possible to that model, because they want to sort of empower places like South Yorkshire to join the dots across all of those different functions and responsibilities. You see it in South Yorkshire with the sort of taking on of the Police and Crime Commissioner functions early this year. That's a model that the government would like to pursue in other parts of the country. It is more complicated in many other parts of the country because the boundaries don't align like they do in South Yorkshire. Good news is that's not really our problem in South Yorkshire. That's a national problem and a challenge for areas that aren't quite as neat and tidy as South Yorkshire. But we definitely, if you read the white paper, we're kind of hailed as a sort of exemplar because of that kind of nature, which is great. What that also means is that the government are really keen that MCAs start to engage in the public service reform agenda as well, so the design and delivery of services in places. That's not to say we become a delivery organisation delivering services that are quite rightly done in place by local authorities, but they want Mayoral Combined Authorities to start to join up those kind of that integration of services and how we strategically commission, so local services aren't necessarily having to like tidy lots of messy things up. They want mayors to get into that space. Sort of set out then the sort of general and governance summary. So there'll be this new tier of government called a strategic authority. That'll be codified in law. You know, Mayoral Combined Authorities aren't sort of written. It's not written down anywhere what a sort of Mayoral Combined Authority is for. We've kind of lots of things in various pieces of paper across the internet. But this will put it in legislation, which is really helpful, and will set out exactly the competencies that a Mayoral Combined Authority have. There will also be changes to how we operate, so a move to simple majority voting, which will include the mayor's vote. So that's sort of, for some places, that'll be quite a big change, probably less so for us. We will every year have the opportunity to propose additional functions that we would like devolving from national government. So, for example, if we've got a formal role in transport, which we know we have, and the government is doing something on transport that we think we should have in our gift, we'll have a formal sort of basis on which we can seek that devolution. What it tries to start to do is devolution by default. So if the government are doing something in our space, then the implication and assumption will be that it will ultimately come to the local, regional or council body, which is helpful. There are some interesting things in the white paper we expect to see around the legislation allowing mayors to appoint and remunerate commissioners. Some of those functions, the mayor currently sits with the MCA. We could, if we wanted to, delegate formally some of those responsibilities to commissioners. It's a model that is quite interesting and sort of reflects at the moment the mayor's cabinet is formally made up just of local authority leaders. So it's sort of trying to understand how you kind of broaden, I guess, a cabinet that a mayor would have. And there will be some strengthening of those accountability mechanisms that already exist. So particular interest of this group in terms of the audit standards and oversight and reviewing the scrutiny protocol. Lots of work for the government to do on determining what the changes to oversight, risk, audit and scrutiny will be, but they're really, really interested in strengthening those things. So I'll just set them out just so this group are really clear, the kind of the defined list of areas of competence, which is the things that MCAs will be responsible for in law. Transport and local infrastructure, no surprise there. We kind of that's the stuff we do already. Skills and employment support, yes, we do bits of that, but you will all be aware that on skills, for example, the MCA has very little influence or say over anything that's around skills and education up to the age of 19. We only really have devolution settlement around 19 plus. The government are not looking to change that fundamentally this time round, but you can see the direction of travel and the way that the Department for Work and Pensions commissions employment programmes, for example, far stronger role for MCAs in that, and devolution of some elements of the funding that DWP currently put into economic inactivity work. Housing and strategic planning, a kind of stronger, more formalised role in housing. Strategic planning is the biggie, probably, in terms of new powers and ones that we really have to sort of navigate and understand exactly how they will work, respective roles of the MCA versus local authorities. I think the government put something out today which might start to help us understand that through the planning and infrastructure bill. But lots more unpicking of the planning function. Economic development and regen, absolutely in the kind of classic, when I started 10 years ago, that's what we were for, to do economy. That's kind of locking that in, but critically making sure that government departments that hitherto haven't really talked to as much as they could, and government agencies like UK Research and Innovation, who spend tens and tens of billions of pounds on publicly funded R&D, currently have no interface or locus in terms of defining how they might invest their monies. The white paper is clear that that's going to change, and that local areas will have a lot more say over sort of government agencies and government bodies spending public money, which is welcome. Environment and climate change will be a function that's sort of codified properly. Health and well-being and public service reform, that's the one where, you know, no surprise that the Mayor has been really interested in as chair of the Integrated Care Partnership. And then public safety, so that's the kind of police and crime and criminal justice system. So those big sort of blocks, there are 7 of them, are quite helpful in codifying where we are going to go. Some of them absolutely in the direction of travel we're currently on, some of them are new. And the last one, just worth reiterating on the public safety one, there is an expectation at some point in some way that we will take on fire and rescue functions. The government have to work out how they do that, especially in places where it's not as simple as South Yorkshire, and whether that is mandated to happen ASAP or over a sort of longer time frame. We don't know is the honest answer on that one yet, but things will become clear as the bill starts to sort of turn into actual words rather than sort of policy intent. So my last sort of set of points really will be what happens next for us as an MCA. The legislative process will kick off. There is a bill team in place in MHCLG, who are the sponsor department for all this. We expect that to become law in the summer of 2026. But we don't need to wait and won't wait, and indeed the government don't expect to wait for the white paper to become fully law before we do anything. So there's an enormous amount of readiness work which we can do in advance of that. Some of the white paper doesn't require legislation, it's just a sort of, well, you could do it tomorrow. So we're working through exactly, there are probably 90 pieces of, a list of 90 things that the white paper says we could, should, maybe will be doing. Lots of those we can kind of crack on with already, and increasingly will start to. The big chunky one though is preparation for the integrated settlement. This is that kind of single pot of resources agreed with the Treasury through the spending review process. Well, it won't be complete by spending review. The spending review will set the broad numbers, and then we will spend the next 9-12 months working with the government on how that integrated settlement works, what are our priorities for it, what are the government's priorities for it, and how do we kind of organise ourselves to deliver against a single pot. You, I'm sure, will all be familiar with the current system where we don't have a huge amount of flexibility within the funds that come down to the Mayoral Combined Authority. We get money in ring fences, and we spend a lot of time spending that money within those ring fences, rather than, for example, looking about whether we could shift money around different priorities and portfolios dependent on the priorities of the MCA. The integrated settlement is the first time we'll be able to sort of start to do that properly, and will require an enormous amount of work for us to be ready for that. And the final point would be the spending review is the big show in town. In determining how much capability and capacity resources the MCA has to bring all this new stuff forward, and then to deliver against it. So dependent on the nature of that spending review outcome is probably dependent on the nature of the scale of the work we'll need to do. And I'll stop there, Chair. Take questions.
Thank you. As I was saying earlier, I've read this report several times and I still don't know what it says. And every time you think you do know, it jumps sideways and says, oh no, not that, something else. Can I just ask you two questions? I'm sure other people will want to ask others. What will the relationship between local authorities and the mayoral authority be? And I know that the document does specifically say there will be less elected members. The other one, which really puzzles me, is the audit, overview and scrutiny relationship. It says various things in the document, but it also refers to two other reports as well. And if you read all those together, you cannot be but confused.
I'll have a go. I'll just clarify, when you say the document becomes ever more confusing every time you lift the lid, is that the devolution white paper rather than my briefing note? Excellent, excellent, thank good.
Not yours, not your report, that's very good, thank you very much. Excellent. I should have thanked you.
So it's just worth, thank goodness, it's just worth saying the government, I think, probably had quite a challenging job in that this is a white paper for everyone, and certain parts of the country are in a slightly different position. And I think when it comes to the relationship between the Mayoral Combined Authority and local authorities, in South Yorkshire, there is no change. There is absolutely no change. First of all, in how we are constituted, the Mayoral Combined Authority is a partnership of 5, the Mayor and the 4 local authorities as formal legal constituent members. That doesn't change, and there is no intention on behalf of ministers or government, as we understand it, they are of course entirely free to do what they want to do, to look at local government reorganisation in South Yorkshire. So there's no sort of intention, and that we're a bit neater than a lot of 2-tier authority places. So it's not something we're grappling with. This is a massive headache for other parts of the country and senior officials in Whitehall and ministers sorting it out. I'm very grateful. It's not something we have to spend too much time worrying about. In terms of the audit and the relationship of audit committees and overview committees, I think the government, so this is just my take on it, the government have a kind of genuine belief that they've set these Mayoral Combined Authorities up and they're obviously accountable to the public through the ballot box, but as more functions come on stream, we get bigger, more money flows through us, that the accountability mechanisms that sort of manage all that, monitor all that, need to be strengthened as well. How that happens, how you do it, I think is still, there is a lot TBC to be confirmed. So we will see, I think, the bones of how they want to do that in the legislation, in the draft legislation. What is interesting is that we know our colleagues and counterparts in Greater Manchester and the West Midlands, who are slightly further ahead of us, they're a year ahead of us in terms of integrated settlement, are having very detailed conversations about how local governance has to sort of be reformed to reflect the kind of enhanced scrutiny. There is one school of thought that we should be far more accountable to Whitehall departments or Treasury, and the Treasury will hold us to account for that integrated settlement. There will be sort of formal structures by which we have to go and show our homework, and they will mark it. We've had to do that, as you all know, through things like the gain share review process, but this will be far bigger and far broader. There are live conversations going on around what a local public accounts committee model could look like. There are some parts of the country that think the members of parliament in the local area should have a far greater say. So I don't think the government really landed on what their preferred approach is and what will wash. I think it'd probably be one of those bits when the bill starts to come forward that there'll be an awful lot of obsession about Some people will pay no regard to it at all, and then some people will be absolutely all over it like a rash. So long way of saying we don't really know how this sort of scrutiny audit functions, but it will be a beefed up version of the kind of model that is functioning well in South Yorkshire.
Yeah, thanks for that. I mean, what made me ask that is that in the two reports which are mentioned in the white paper, there's an emphasis on making audit committees better. In the white paper, there's some confusion around that Public Accounts Committee and a vague suggestion that it might include scrutiny and overview. Do you have any thoughts?
If I'm honest, I don't, because I don't think I understand it enough to give you a particularly good response. I don't think anything is locked down. The conversations we've had with officials is that they're trying to work out a model that will, you know, as ever, a model that they can apply nationally or in England, and they inevitably come up against the challenge of a model that works in one place might look a lot different to a model that works in another place based on the history and the structures that may or may not exist in place.
Thank you very much for that. Yes.
I agree with some and a lot of your comments, Chair. But in principle, I agree with the report. I am a devolutionist, as I'm sure, well, I'm assuming most of us are. However, and there's a big book coming. Having read it through, like the Chair, twice, there's a big gap. And I hear what you were saying in your last comments regarding finance and the monies. I'm a believer that in terms of local democracy is that the local people will determine what the budget will be, not Whitehall, and that's the situation we've still got. Even though they might turn around and say it's a slightly bigger bag than it was last year, we're beholden too much to Westminster, and they're not cutting the financial purse string, shall I say, in letting us raise. There will have to be a framework. I accept that. But nevertheless, it's something that needs to be raised politically and within the civil service in terms of what model, how far are we going in terms of devolution? Is there going to be financial freedoms within a framework? The other thing I've got to mention is, and there are was it 6 or 7 items, and I'm an ex-county councillor for South Yorkshire, and I remember the battles we had in South Yorkshire with the metropolitan authorities, including Sheffield, sorry to say, but in planning. Therefore, what I don't want to see is a return to what we had before, and they were royal battles, believe you me. We don't want that. Sitting on Doncaster Council as I do at the moment, and on planning, not currently, we went through the local development plan. I'm using that as an example, Chair. The local development, I believe Sheffield's going through its own currently. I don't know where Barnsley and Rotherham are at the present time. Yeah. The thing is, they're already establishing through consultation what's going to be and where. Now, it's a living document, I accept that. And then all of a sudden, we've then got South Yorkshire, or the MCC, South Yorkshire MCA, sorry, coming along with its potential plans on housing and where they were going to go, etc. And this is the crux of the matter, because in terms of housing and other objectives, planning for development of buildings for work, etc. But I'm concentrating on housing. South Yorkshire County Council had the veto, and it was that caused the problem. So therefore, I would suggest that from this committee to the board, but through the officers, we need to be talking with the people that are dealing with the white paper, that there has to be harmony between South Yorkshire and the four Met authorities or anybody else for that matter. There's got to be harmony. If there isn't, you're just going to end up with problems. And it's quite serious because the authorities, all four of us, are being set targets, potential targets for housing, and so will South Yorkshire. What that'll encompass, I've no idea. So there's got to be harmony, otherwise there's got to be eruptions. And again, I don't know what the details of in terms of planning, what they are. In other words, the veto may not exist, whereas it did when I was on South Yorkshire. And I just heard caution on that, Chair. Thank you.
Thanks, Chair. I'd just like to build on what John said there, because I fully support what you say, John. I think the complaints about the planning processes are not well founded. One of the many challenges we have over housing development is developers sat on land and sat on land for a long time. Sat on brownfield site to wait for greenfield land to come forward because they're going to make more money there, and I'm waiting to see whether this government can really tackle that issue and make sure that it's resolved, because for me that's the major thing that's hitting us at the moment. Thank you.
Yeah, I have to endorse your comments on on land banking. I think that's one of the major issues. It's not the fact that the planning don't bring things forward timely, it's the developers' land banking, in my opinion.
Thanks, Chair. Yeah, I mean we've touched on there people already on the overlapping responsibilities of housing and strategic planning. I mean, similarly, where's the primary responsibility for health, well-being, and going to be? We've got public health teams in local authorities. Obviously, the health service has got a big locus on health inequalities, and now we've got a third body potentially also having a responsibility for health inequalities. Are the proposals clear on who's going to have what responsibility there and avoid overlapping? And just a quick one while I'm on as well. MCA has taken on fire and rescue. Have we got any sort of timescale for that? Because that's going to be a big extra task for us here.
I'll take those in reverse order. Thank you for the question. No, we don't have a timeline. I think we have to kind of wait until the government has determined how they want it to happen, whether it's a kind of mandatory do it as quickly as possible or do it on your own time, or will we have to submit a proposal for when an appropriate time to do it would be. So long way of saying don't know yet. I think the points you raise about the health and a third tier is a really good point, well made, but I think what I should do is just, if you strip away what the white paper says about the role that mayoralties will have on tackling health inequalities, a lot of the duty that they're going to give us is it's an enabling duty, one that looks probably a lot like the things that sit in a local authority anyway. It will have some tweaks around the corners of it, but it won't be fundamentally different to an existing duty. That's a tried and tested route for the government to give MCAs powers that look a lot like the same ones that local authorities have. One would question whether you need that duty in order to tackle health inequalities, because we have various powers and functions enabled us to do that anyway. But strip it all away, what they're saying is they want mayors to chair integrated care partnerships. The mayor already chairs integrated care partnerships here, and there is an allusion to the mayor having a role in the recruitment of the integrated care board chair. So where does the power sit in the health system in South Yorkshire? In the integrated care board. There's no intention to turn that upside down, reform that through devolution anyway. I don't know what the Secretary of State for DOHSC intends to do, but not through the devolution route. So it's certainly not creating a new tier. What it is starting to do, I think, is give a mayor and an MCA more levers over the health system as it currently is at that kind of South Yorkshire Integrated Care Board level. So at the moment, the mayor, other than chairing the Integrated Care Partnership, which is not where the decisions are made about where spend goes, is as strong as it gets. The ability to start to inform the recruitment and process of the Integrated Care Board does insert another lever, but let's face it, these aren't massively strong levers. That I get the sense that they are the start of a process, and it might look a lot different in 4 years or 8 years or 10 years than it does currently. So it's not a massive fundamental shift, to be honest, but it might be the canary down the mine.
Thank you, Chair. What will be the competency test then to decide if you can have additional powers devolved, and who is the examiner in this case?
That's an excellent question. Well, the good news is, whatever test it was, we've passed it from becoming a sort of strategic authority. I couldn't possibly comment on how they've arrived at that. It does involve just being more than existing, I think. There is a set of tests that I think I'm going to look at Mike here, that Deloitte's will be commissioned by national government to make sure we hit a set of readiness checks around being eligible for the integrated settlement. So those readiness checks, and I'm going to butcher Mike's far more knowledge on this, but have we got the processes in place to manage money effectively? Have we got appropriate audit, scrutiny, risk functions? Have we got an assurance framework? The nuts and bolts of a good organisation that the MCA, I would argue, has had a pretty good track record of using embedding and reporting and being transparent. So I would say an audited set of accounts is probably one on the list. Statutory officers being in place and sort of dispensing their duties. So I'm not going to say it's not onerous, but I don't think it's going to set us a set of tests that should surprise us. But I'll let Mike or Gareth come in if they want to add anything.
Yeah, so as Andy's mentioned, so Deloitte were contracted through an open tender process back in November last year to undertake the readiness checks on the two Trailblazer authorities, GM and West Mids. And it was made very clear that even though a Big Four audit firm was being commissioned, the intention wasn't to come in and do a conventional audit with a pass-fail like we would get, say, qualified versus unqualified audit opinion for our accounts. The idea would be that they will publish a report, and the draft report for West Mids landed in my counterpart's inbox last week. It's being discussed by their exec leadership board this week. Will give a series of recommendations of what they found, and then I think what will be helpful for this committee, if I've understood it correctly, is that the intention is for these the final reports to be made public. So it might be something that the committee wishes to have a look at in due course. They set out a series of themes to look at as part of these readiness checks. So strategy, planning and governance is on there. They look at governance forums, they look at people and processes, and in many ways they're looking for reassurance that the kind of stuff we've got later on this agenda, such as the assurance framework, which Lindsay's covering, that we've got that in place. So some of it's no big surprise. As we're gathering more intel around what the readiness checks will entail, then we'll continue doing our kind of self-assessment work just to identify if we do have any potential gaps that need to be addressed, and make sure we make best use of the time available between now and when we would expect the readiness check to be formed. One thing I should just add as well is that my understanding is that the Deloitte were only commissioned to do readiness checks for the two Trailblazers, and so there's a decision to be made about whether MHCLG, who commissioned Deloitte, will either extend or go back out to market, or indeed maybe bring back in-house and do a lighter touch process. That is still to be determined.
If I could just add a few points onto this. So we've for years been asking for the flexibilities that are now being offered to us under integrated settlement. We have 40 plus funding streams balancing our budget this year. Each of them have conditionality, which essentially means you've got 40 bits of budget that you have to treat independently. And that is really hard work. And it means that we often lose the coherency in what we do, because rather than trying to deliver against a suite of outcomes, actually we're just trying to spend money in this little silo over here, replicate that out 40 times. It's hard to measure performance because, again, you're looking at individual bits, so you're sending lots of grant documentation back to government. None of it really makes any sense to a leadership board. If I put it on the table in front of this committee, you'd probably struggle to understand what it meant. So we've lost the link between the inputs and then the outputs and outcomes at the end, because we've created this hugely complex funding framework that we exist in. All that is roughly going to go, and we will get a suite of funding to deliver against 6 priority pillars of activity with a suite of agreed outcomes with government. So it's everything we've asked for, but it fills me with trepidation at the same point, because we have constructed an organisation over this 11 years since 2014 that points us at delivering against that. So the game is that is what we have to deliver against. And over the next 12 months, we'll have to point over there. And that means a rewiring of the way this organisation works, how we do business, how our finance team works. We've become very good at managing a very complex system, but the rules of the game will be fundamentally different. And that might mean that all our core skills and capabilities will need to be different. Well, then we'll have to go through that process of working out whether we can do it in that way, or whether we've got the right people and the right systems and the right process to do all that. So there's a huge amount of work to be done to get us to that point. And this is also a really significant point about political culture as well. So the way we work, our governance processes all support a political culture that again is framed by the rules to which we are currently operating. Into the future, it will again be very different. So to date, we've largely worked within constraints where we deliver programs of government activity. Government tell us how to do it, they tell us when to do it, they tell us how much we can spend to do it, and we just get on and do it. And we can add local flavour as we go along, and of course we do that. But all of a sudden, if the opportunities are opened up to us, do we have the right governance frameworks? Do we have the right political culture to make best use of all that? And I think that's a really open question that we're going to have to work through. And we won't get it right on day one in 26, 27. There'll be a bit of iteration to make sure that we can build on what we've got now. But in the context of what does all this mean, it is a really fundamental step towards us reaching the sort of level of autonomy that we've always wanted. But I suspect we will incur growing pains in getting to that point. So I think this committee ought to expect to see further updates from people like Andy, from myself, about what we are doing to get ready for all this, but start to see things pop up on the risk register, because it is another big change that's coming down the path on top of all the other big bits of change coming into the future. And making sure at any one point in time we are able to deliver everything that we need to do for today and for the framework that we operate in today, whilst also beginning to pivot teams towards the future, is going to be a big challenge. So it's quite exciting, but it makes me nervous as well, looking at everything that we need to do.
So if I interpret that right, in future we'll get a big bunch of money, the MCA will prioritise what that money is spent on, and then you'll deliver it. There will still be a framework. There will be 6 pillars of activity. There will be an outcomes framework that we agree with government. So rather than working to outputs like a kilometre of active travel route or whatever, we might agree much broader outcomes. We will do that with government. Government will then say, here's the money. We will then have discretion to move money between the pillars. So the skills funding will still land within the skills block, but we'll have some discretion to move it around. And really importantly, there will be an opportunity to convert capital funding into revenue funding. Not all of it, but an amount each year. And that's dead important, because we've always said we were relatively revenue poor, and that really constrained our ability to use capital well. So it's not complete funding autonomy, it's a step in the right direction.
but it marks a really significant change from where we are today.
Okay. Thank you. I think that's clarified some points and given us food for thought on others. Thank you very much. So if I can go on to the next transport working, Paul, verbal report.
Thank you very much, Chair. And we have Eugene with us if there are any detailed questions on CRSTS matters. But he's got another meeting to go to at 2, I believe. So if I can take that first of all, is one of the items which we discussed at the working group. And that was where we were on the overall CRSTS work. Eugene's been doing a lot of work on improving the governance of managing those projects, one of which, the Parkgate Park and Ride, is still slightly underfunded. There's been a lot of work done by officers to via money from one project to another to cover the overspends on that, but there is still a shortfall on there. In particular, I think, Eugene, you've started to look at the broader CRSTS programme, apart from just the ones that are led by Sheffield. Do you want to say anything on that?
Yeah, and to clarify on that. So what we've been doing in the last 6 months, and we've worked closely with Mike and the finance team on this, is to have a better approach to a programme for the public transport projects we deliver. They're delivered separately to the ones that are delivered in each local authority. And Lindsay, who sat there, and the assurance team kind of assure those through the programme board. So this is about the MCA's own delivery. And there are some examples there. So the MCA has been delivering a park and ride and relief road arrangement at Parkgate in Rotherham. We're also delivering a major scheme on the A61 in Barnsley. What we've been trying to do as part of that is to have a better programme approach. It actually links to what Gareth's talking about a lot. Even at the moment, we need to do a lot about how we manage an overall programme rather than individual schemes, and this will get even more important with devolution when we've got more flexibility on funding. The work we've been doing on that, so what we've been doing is trying to work out where we've got underspends on some projects that we can move across internally and get approval within the MCA's processes to allocate them to projects where we've got overspends. The two major issues we've still got outstanding on the two schemes we mentioned. So the Parkgate scheme is just about finished, barring Northern Power Grid finalising an electrical connection, which is the last bit, which should be there soon, to the Park and Ride, which lets us turn the lights on. But the A61, a more substantial scheme, is not yet fully overspending, but is likely to, due to difficulties with the bridge work there. What we've done recently is do a lot of work to deal with most of the overspends. They are the two outstanding issues. And when Paul says we're looking at wider CRSTS, I don't mean, by the way, I don't mean schemes in other councils. I mean within our own MCA approvals, just to be clear. And what we need to do with Mike and through to Gareth is work out what our options are to move round wider funding within the purview of the MCA. That's what we're currently working on.
Thank you, Eugene. Do members have any questions on that for the moment? Right, thank you. If I can talk to two other items which we discussed. The first one was the CRM scheme and the project, where members may recall that that has got quite a severe challenge in terms of being ready for the ending of support in January 2026. The good news is that we now have a project plan which shows delivery by the end of November. Training will begin in September. The timescales are still extremely tight, but I think officers have worked well to undertake some work at risk, such as going ahead with procurement before they got the formal approval, which has now been obtained from Executive Leadership Board. So everything's all systems go for delivering that, but we'll need to watch it month by month to make sure that we don't slip behind. The second item which we raised last time at the February meeting was about the need for clarity on safety responsibilities on some of the tram operations, and the MD of Siftel has made some good progress on that. The risk has not changed on that, the risk rating hasn't changed, but it's likely that by our next meeting in June that will have moved further down. The final item which we discussed was the risk report, which is the next item on this agenda. So happy to take any further questions on that.
In as much as I'm a member of Barnsley Authority, I just ask a very simple question of Eugene. Will the full scheme go ahead, and what's the timescale?
Yes, the intention is the full scheme's going ahead. What we're trying to do is finding out a way of funding that. I've forgotten the exact full time scale of the delivery. It's still a couple more years at least, but I can double check that and confirm.
That's enough for me. Thank you very much. Yep. Next item. Oh, sorry. I thought you were going to go on.
Sorry, no, it's the risk
Right.
monitoring report, which is
Okay.
the next item 18.
So if there's no further, Paul, thank you very much for that. Paul, we'll accept that, and thank you very much. And move on to the risk monitoring report dashboard 18, and this is Claire.
Thank you, Chair. So members will note that the format of the risk dashboard has changed slightly since the last report in November. This is kind of in response to some of the feedback and questions that we received at that meeting. And we were also conscious as well that due to the low number of medium, high and high risk at directorate level, there were quite a lot of blank space in the previous report, so we've tried to consolidate that. The report also reflects some of the slight reorganisation in terms of teams and directorates within the organisation as well. So on page 164, that provides a summary of the corporate level or strategic risk profile, and there's only one risk on there with a residual score of high, and that's the reactive measures to budget issues, which relates to the police budget issues, which we've discussed at length in the morning session. And on page 165 at table A, we've tried to pull out the risks that are showing as exceeding the appetite for the risk category that they've been allocated. And we've also included that target score that the risk owner has given. So in some aspects, you might have got a target score that is actually higher than the appetite level and vice versa. And then at table B, we've got risks where we'd had a residual score that was exceeding appetite in the last period, but they're now within appetite. We've tried to give a little bit high level information as to why that's come down. On page 166, that shows the spread of risks across all directorates and teams, and there's a placeholder there for the Policing and Reform Directorate, but I can kind of report that we've completed that work now to integrate policing and reform risks into our system, and they're actually going into the system at the minute, and a report is being prepared for the GIAC meeting. So by the time we get to the next audit committee meeting, they'll be included in there. In terms of the format of the report, as Paul mentioned, we discussed some of it at the Transport Risk Working Group, and Councillor Levery in particular provided some feedback on the format and suggested it might be helpful to look at it again and look at grouping or categorising the risk by the asset, I think you said, Councillor Levery. So we'll take that on board and continue to evolve the reporting so that we meet the needs of the organisation. And I think just in terms of working with teams during the last cycle where we've done a transport risk working group, a transport risk session and an HR session, among other things, it's kind of becoming more and more clear that as our operational environment and the size and complexity of the organisation's work, that risk management framework now needs to kind of evolve further, and it needs a bit of a comprehensive review, and that's something that we'll work on in this next period as well. So happy to take any questions or field out to the risk owners in the room. Thank you.
Just a couple. I'll get the right page because obviously it's quite a long report here. Page 171. There's an update on DSA closure, and it talks about things in early September, and then it's got work continuing on it, and the update date on that is down as 28th October 24. Has it been updated since then? The date's not been updated, or it just looked a bit. Everything else had a quick flick through, seems to have update dates this year, and that one doesn't. So
apologies, I thought that had been updated.
Okay,
so
that's just
yes,
it. That's fine. And the other one is page one, a slightly more substantive one than page 175, the hostile vehicle mitigation risk. Has got a comment that we've got to undertake further assessments on this. I know you can't do things instantly, but hostile vehicle mitigation looks, is sadly an ever-present risk. We've had things in Germany over the last week or two. How long is it going to take us to get everything done on that and get anything in place? I'd hate us to be spending a lot of time risk assessing on it and not get the work done, and then there be an incident in South Yorkshire while we're waiting.
I'll certainly take that back, but obviously I'm not the risk owner of it. So
no, I appreciate that. I've just looked at it and sort of worried a bit. We've got to undertake further site assessments to identify new requirements. And you think
I'll take that back and get an answer.
It's a fairly urgent live issue.
Okay.
That's it from me.
Thank you, Chair. Just one comment, and I'd be grateful if other members of the committee would give their views on the new layout. I think taking Councillor Livery's point about grouping things by headings such as trams, infrastructure, would help us see all the risks around one particular problem. But what members thought about the new layout, I think at Risk Working Group we thought it was a lot cleaner being able to see what the target priority was, close to where you actually are and where you originally started from before you put in mitigation measures. And thanks to Claire and her team for all the hard work they've done, and I know that the MD of Sheffield was very complimentary about the support which have been provided to Sheffield on developing its risk monitoring report, which is very much now in line with what we're doing at the corporate level.
Thanks, Chair. Just page 159, new risks. Several potential new corporate risks being identified, so several and potential two keywords. So what sort of timescales will it be? Well, when these will come forward to be looked at? And several, what are we talking about numbers-wise? Thank you.
Shall I just go and I'll let you come in, Gareth, if that's okay. So in the last review period, when we presented the draft report to the Executive Leadership Board, we presented some draft risk descriptions for consideration. We didn't quite make it in terms of getting them into this report, but I think Gareth alluded earlier to some of the challenges that we'll start to uncover in the coming months, but I'll let Gareth.
I think it was largely that. So excuse me, working with Claire, the exec leadership team, starting to drill down into the things we just talked about around devolution. That's now becoming much clearer. Just this morning, we got sight of the integrated settlement readiness criteria, so it's starting to give a little form to what we'll need to do. So we could have probably sharpened that comment up, but it was largely the emerging devolution agenda, what it means for us, how we need to react to that. once that becomes clearer, as I said in the previous item, I think you should expect to see it start bubbling up on here in a way that it's not doing currently.
Yeah, can I ask about net zero? There seems to be, dare I say, no clear way forward on that. Is that still the case? Inability to galvanise, whether we do tree planting, etc.
I think the work from, I'm not quite sure, I was left
It was almost a question, wasn't it?
You received a bit of a deep dive a couple of meetings ago. I'm not quite sure what's happened since then with, was it Greg that came to meet with us? So I think that the risk is still recorded on there, but I'm not quite sure the next steps. Maybe Gareth or Mike have got an idea.
I think there's probably a few strands to this. I think that my starting point with net zero will always be that this is an incredibly hard one for us to deliver as an authority. Clearly, we are in receipt of funding and we have convening powers and the like that we can bring to effect, but our ability to fundamentally change things is obviously pretty constrained. What we are on with, though, Greg was on loan from National Infrastructure Commission. I think as part of the current business planning round, we're looking to recruit more permanently into a role to take on the work that Greg did for us. We are also on with quite a bit of practical activity, so our local electric vehicle infrastructure programme will be live in 25-26. The Mayor launched his Million Trees, Tree for Every Individual programme this week, I believe, and we published the output from the Climate Change Assembly just a few weeks ago as well. So there is activity happening. We probably do need a little bit more resource, and that's one of the things that we're looking into as part of business planning. But yeah, I just always flag that this is a difficult one for us to do on our own, and it's one we're hoping that we'll get a little bit more clarity once the spending review is published in June and we understand government's sort of direction of travel on this.
Yeah, I think we all recognise that in large part this is down to individual authorities, and perhaps they're not doing enough, although some are trying. Can I go on then to ask about the council housing plans? Because that seems to be a similar sort of situation where we have hopes and aspirations, but let me see, lack of capacity, insufficient powers, lack of funding, etc. I mean, is that a realistic ambition to build council houses?
So the MCA has a broad aspiration to see housing increase within South Yorkshire, because we see it as one of the fundamental drags on having a productive economy. We know that there are too many people in insufficient housing for their needs. We've done quite a bit in this space over the last year, not least entering into a strategic partnership with Homes England, building on some of the really good work that's happened in the city just recently. That's one of the first of its kind across the country. It's allowed us to develop our housing pipeline with Homes England. I'll use the SR word again. Unfortunately, we don't know what government will fund us for into the future around housing. We're currently only in receipt of money to support brownfield housing. We've done some really good things, again, largely in Sheffield. But we recognise that the brownfield housing programme doesn't really fit for all the region. Industry in Barnsley and Doncaster was often underground, so there's not as much brownfield housing as there is in the city of Sheffield. So we'd like to see a change in a way that works. There is the potential as part of integrated settlement that the MCA's broader settlement will include some affordable housing money. But again, we're waiting to see on that. So right now we're in the space of we'll deliver our brownfield housing programme. Government have agreed to roll over some funding from 24-25 into 25-26 that will allow us to get the tail of the programme away. That includes schemes like Attercliffe, Cannon Brewery, Gateway East, Doncaster, amongst others. We will kick on with our partnership with Homes England, and that should be fruitful because Homes England have the real firepower around home building and investment in this country. So that will allow us to progress the pipeline of activity, and then into the next year, post the spending review, we should have sight at that point about what we can expect to be included into our integrated settlement, and that should give us a firmer view about where we're heading with that. Just in terms of devolution as well, just a reminder that planning is part of the mix as well about devolution. So there may be a new burden heading the MCA's way that we didn't ask for, but is part of the wider mix around planning for housing into the future. So it's quite a lot of activity, and I think housing is probably a good example of where we are pulling different levers, whether it be money or influence, to try and progress. But we really do need a bit of clarity from government about what they want us to do.
Yeah, I think we all welcome, with the reservations, more housing. But I was asking specifically about council housing. Seems much more difficult, and I think much more relevant to our community's needs. That is so-called affordable housing, which often isn't affordable.
Yes, we recognise council housing has to be part of the mix. The Devo white paper, I think, talks specifically about council housing, largely within the realm of additional powers to local authorities as housing authorities. So there was talk within there about greater use on right to buy receipts, changing right to buy more fundamentally about how that would work into the future, and generally giving housing authorities more chance to actually deliver council housing through their HRAs. And we all probably recognise, if you're involved with a local authority, HRAs are under an awful lot of strain, and there is very little capacity in there to deliver that housing. So we have funded council housing investment over the last year or so. I think we'd certainly like to do more as part of the broader mix, but again, we'll know more hopefully by the summer about this.
Just a quick one, just to come back on Dave's point about the DSA one. Had intended to put an update that reflected the decision that was taken by the MCA board last month, but I omitted that, so sorry.
Lindsay.
Thank you very much, Chair. Good afternoon, everyone. I'm delighted to present the draft assurance framework for your endorsement this afternoon. Just to remind you all of what the assurance framework is, it's the document that explains the processes and the procedures and the structures that we have in place for decision making at the MCA, and also the processes that we go through in terms of approving and appraising and approving projects for investment. We've just concluded the annual review of assurance, which we do every year to check whether or not our processes and procedures are appropriate and robust. And we've made a number of amendments to the draft assurance framework for 2025, which is set out in paragraph 2.1. The most fundamental ones are around the police and crime powers, and also in terms of the SIFTL operation. But there is a new requirement from DFT that we assess the impact of carbon on some of our integrated schemes. So that's largely the transport scheme. So that's in line with government policy in terms of looking at carbon emissions and the ability to achieve the carbon emissions target. We've also included some additional updates to the funding programmes that have been awarded to the MCA. And just in terms of clarifications to the assurance process itself, in terms of just improving how that process is working for us. We provided some clarity on the assurance process timelines, and that was in response to a request from officers at local authorities in terms of just understanding a little bit more about how long it takes us to take projects through the appraisal route. And from a risk management perspective, we've also added in some additional comments and recommendations on the additional due diligence that we'll be undertaking for any company that is seeking investment from the MCA that is from a private company or from another sort of company formation, such as special purpose vehicles. That's just to ensure that we're actually undertaking some additional financial and commercial due diligence on those applicants as part of the appraisal process. But I'm happy to take any questions at this point and any other suggestions for anything else you would like us to incorporate that into that assurance framework before we submit it to government for their approval at the end of this month. Thank you.
Lindsay, before we take questions, just worth reflecting, in the last few years we've made some really significant changes to our assurance framework. That was in consultation with local partners and in part reflecting the pace at which we were delivering on some of our programmes. So the last two cycles where we brought this to you, we've had those quite big changes coming through. I think it's fair to say now, settling down, we've got into a rhythm. Some of the gripes that we were hearing from LA partners have gone. We are now getting better capital delivery. We see that in the expenditure that's coming through. So I think this is probably testament to the fact that we have made those changes. Those changes are now embedding and we're into a bit more of a steady state now at this point. Thank you.
Yeah, thanks very much for this paper. I've got one very tiny, very picky one, but it's relevant here. I think page 207, paragraph 365 says there's 2 independent members on audit standards and risks. There's now 3. So since we're approving it, we ought to get our committee membership right. And page 194 before then helpfully lists all the various funds that are coming in, and it's not necessarily a question for you and one that probably Gareth can't answer, but have we had any straws in the government yet for the allocations beyond 2025, and is that changing due to the recent need to up public expenditure on defence? So have we got any straws in the wind yet over our longer term funding position? Is a concise way of asking that.
Yes and no. So we are getting different messages at different points about what is into the future. So what we are hearing broadly is government are likely to support those projects that they think will help deliver the national growth agendas, and that includes the transport funding. But what the shape and mix of that transport funding looks like, we're not entirely sure. So we've got residual concerns about whether the money that we're receiving to sustain the bus network will continue beyond 25-26. We are promised 1.45 billion for the spending period 2027 through to 2032 for our transport capital investments. We understand that that there's hopefully positive news around that, but equally we recognise that there's lots of national challenges in the mix. We've got a 1-year funding settlement on UK Share Prosperity Fund. We did fear might go entirely or might be cut significantly. We've had a modest reduction on that, so we're not sure. Our big skills programme used to be called Adult Education Budget, AEB. It's now called Adult Skills Fund. We've had a 3% reduction on that, so hopefully that redresses itself into the future. But that aside, what we do know is heading our way in 26-27 is an integrated settlement where we'll consolidate a lot of these individual funding streams. I guess the thing that we need to be alert to is that in consolidating funding streams, we don't lose things, and government don't take it as an opportunity to for things to fall between the cracks, as I think we've probably all seen before now under different governments over the years.
Yeah, mine's a point on an accuracy as well. 3.74, it talks about membership of the Joint Independent Audit Committee. That's 5 independent members. People who've got listed here attend the Audit Committee rather than being members of it.
Thank you, I'll make those changes.
Thank you, Chair. Question on Appendix A, the one at page 250, and that goes on for several pages after that. Does your team put that data together, or what's the source of the data? Because there's some fascinating.
So this is the outcomes framework. You might have seen it in previous versions of the assurance framework where it was referring to the SEP performance indicators. The eagle-eyed amongst you might recognise some of those measures, because most of them are the ones that have been in the SEP indicators. So that's the Strategic Economic Plan indicators. There's 6 new ones that have been included in that list. But effectively what we've done is we've updated the data in terms of the columns that are preceding those individual targets. So it provides you with a more up-to-date reflection of where we are currently performing on each of those sets of indicators. But the indicators themselves haven't really changed that much since the ones that were produced when we did all the Strategic Economic Plan evidence base. So that's where they've come from, and it's been compiled by the Policy and the Strategy Directorate.
Thank you.
With the changes to the wording. Thank you very much. Item 20 is the Code of Corporate Governance, Claire.
Thank you, Chair. So the Code of Corporate Governance is aligned to the Sit for Solace Good Governance Framework, and we review it on an annual basis and we bring it to committee. So when the organisation was first established, we were very much a kind of policy forming, commissioning type of organisation, and some of the sub-principles of the framework that related very much to service delivery and things like that were slightly irrelevant to us at that time. So year on year we've added to the code and enhanced it as we've gone along. So the proposed enhancements are shown in track changes in the appendix in the actual code, and at section 2.2 the cover paper that summarises them. So these amendments, I think, speak to the kind of current operating environment and the anticipated operating environment. We've heard a lot today about the changes that we think are coming down the line as we move closer to further phases of devolution, as well as recognising Mayor's key principles around things like seldom heard voices, the organisation's relationship with the police, the big decisions around regional infrastructure, transport investment, things like that that will affect future generations, and the risks that are associated with third parties such as a tram company. So that's the rationale behind the enhancements that we're proposing this time around. So the revised code will go to the MCA board as part of the annual corporate governance update, and then we'll be updating the constitution if approved. So happy to take any feedback on the changes.
Just observation, that's all, Chair, and thank you very much for submitting it in track changes. It makes it tremendously easier to follow what's moved from one document to another than when it comes as a clean document. Thank you.
Things, unless anybody has any.
That's the benefit of track changes, we can see what's changed.
So annual governance review progress update. So really this report is just to provide assurance to the committee that the annual governance review, whilst not yet complete, is underway as proposed in the report that we brought back in November. So that was kind of conducting it through facilitated conversations and interviews with key officers. But the point that I really just kind of want to acknowledge is a bit of a theme for today, I think, is that Whilst we're kind of conducting that review in the manner we've been doing it for the last 8, 9 years, however long it might have been, just recognising that due to the kind of size and complexity of the organisation as we keep growing and the direction of travel, we need to evolve our approach to doing the annual governance review going forward. So I think the piece of work that we're doing around assurance mapping, which came about as a recommendation from internal audit, and in discussions with the Director of Legal and Governance, we're thinking about how we might introduce things like accountability statements and other self-assessment toolkits provided by local government association, etc. So as we continue to develop the approach during this coming year, we'll keep you updated on how we're doing with that and what we're intending to do next year, but just really recognising that we need to change the approach as we move forward to meet the needs.
Claire? No? Oh yes, Paul.
Sorry, just a quick one. On there's 3, I think, that are ragged red. One of which we had a briefing on, the one on page 294 we discussed, I think, at the previous audit committee. In terms of the 2 that are remaining reds, are there any significant risks from that if we slip beyond the timescale that we've got?
Have you jumped on one, Paul?
Sorry, I'm leaping ahead.
You're leaping ahead.
I am.
If you
Sorry,
use track
I'm
changes, you'll be fine.
Sorry, I'm on 22.
Have you got a poster count?
Apologies. I thought I'd run on there, but
Well, we'll let Claire say her piece first, and then.
Okay, so shall I move on to governance improvement plan? So there are 4 over the target date that we originally set, yes, that's correct. So the first one, the consultation engagement framework. So I understand from the lead officer that there should be a first draft by the end of March on that. Then there will be a period of consultation during April, a consultation on the consultation, and then a final draft in May. That's the current timescale for that one. So hopefully we'll be able to bring an update to the June meeting, and potentially the lead officer will come and present that. Consolidated customer complaints and feedback process. So the process has been agreed with the Executive Leadership Board, but the implementation of it has a bit of a dependency on the CRM project, so it's tied up with that. So that end date is likely to extend into 2026. And on the digital strategy, I think that's been reviewed by Executive Leadership Board. I think it's currently with Gareth for final review. And then the consolidated HR policies. Obviously, at the last meeting you received an update from Julie Hall on issues around harmonisation and things like that, and it's kind of tied up with that, but I know they're trying to progress that further now by uncoupling some of them from the T's and C's conversation. And we'll be developing, obviously, a new governance improvement plan for the coming year, and then discuss which ones we carry over from this year that you want to keep monitoring.
Oh, page 294, I understand.
294 we dealt with.
Oh, is it?
Yeah.
Gosh, I'm getting ahead of myself. Right.
You're quite right.
I'm too old for this.
It's on
Yeah,
291.
dealt with.
There's 2 that are quite close together. So.
Okay. Right, well, if we've dealt with that, we've considered the progress. Thank you very much. So a verbal update on breach of controls report from Gareth.
No update this month, thank you.
That's short, sharp and very smart, thank you very much. Work plan 25/6, Claire?
So this provides a draft work plan for the coming year, given this is the last meeting of this financial year. So we're just looking for any feedback on that. We've also provided Appendix B, a rundown of the accountabilities within the terms of reference, just to make sure we're ticking everything off. There are a couple of things on there, I think, to be advised. So happy to take any feedback on anything you think's missing or the timing's not quite right, either now or if you think of anything after. If you want to get in touch, that'd be great. Thank you.
Just one suggestion, Chair. Would it be appropriate for us to have a briefing on the airport in the June meeting, given the decisions that are outstanding?
Certainly welcome.
Yeah, I think we're hoping to get a conclusion by the summer, so we should probably have a good direction of travel by that point. Yeah.
Yeah, that's what I was thinking. Yeah, thank you.
Thank you very much for that, Claire. And move on to issue for escalation. I haven't been notified of any. No. And AOB, AO urgent B. Yes.
It's just to inform the committee that the public report papers for the 18th of March should now be out. Part of that document pack is seeking the appointment of our new chief executive. So there is a preferred candidate that's emerged from a competitive recruitment process. It's a lady named Catherine Hammond, who is currently Director General at GCHQ and has an impressive CV, including lots of senior roles within the Cabinet Office. So that will go forward to our board on the 18th of March.
Good. Well, we should be fine on cyber issues then. With that, I think I can come to the end of the agenda and close business. Thank you very much for attending. And, well, thank you.